What's good, family? It's Mike back with another video, and in today's video we're going to discuss where you should be buying and selling within the Forex market. This is strictly my opinion because I notice some people, they buy or sell at the wrong areas. They'll buy in the middle of a range, or they won't buy at close to a support level, or they won't sell close to a resistance level. So there's a lot of factors that go into it, but I'm going to explain all of that in this video. So before we even get to it, you already know what to do. Make sure you please comment, like, and subscribe. Turn on that notification bell to become a part of my notification gang to know when I post a new video. Stay updated with your boy. You feel me, man? I appreciate all of my supporters, man. I appreciate all the love. I love and appreciate all you guys. Much love and respect. But other than that, let's get into the video. All right, family. So here we are. You already see that I already have the H4 levels marked. The H4 and the daily levels are very, very significant levels. I'm not going to go too in depth in that in this video. Just check out my previous video when I talk about market structure and all of that, and how important the higher time frames and stuff are. This is one level that I didn't have marked in particular. I'm just gonna have this boxer right there. So boom. So what you want to do is take entries once price comes around these levels. Once you have these levels marked, you can easily go down to that hour one. You can see how these levels have been rejected on the hour one heavily. And if you go to the 30-minute, you can see that it's been rejected the same thing. 15-minute, the same exact way. You guys can see it clearly on here. Very, very simple, guys. Nothing crazy. If we go to the 5-minute as well, price has also rejected around these levels. Now, I want you guys to remember something. If we go back to the 4-hour, even though we're going down on the lower time frame, even though we're going down on the lower time frames, and I don't know why I just took off my boxes. Even though we're going down on the lower time frames, you want to remember that when you go down to the 30-minute, the 15, the 5-minute, the 1-minute, it doesn't mean that these levels should be forgotten. It just means that price is going to get to these levels a lot faster as you scroll down the lower time frame. So after you identify these levels, all you have to do is go to the time frame that you're comfortable with. When I say that, when you're trying to choose what time frame you're comfortable with, all you're doing is seeing how price rejects these levels on the lower time frames to see if you can get a level of confirmation that's comfortable to you on that particular time frame of your choice, depending on your opinion. So I could go to the 30-minute now. If I see something nice like a candle formation on the 30-minute around that particular H4 or daily level, then I could take an entry. Or if I see a nice little setup on the 5-minute, according to how the candlesticks are showing me and they're cooperating, then I could take an entry off the 5-minute. It's strictly personal preference when you go down the lower time frames. But I'm not going to get in too much on that. I'm just going to show you guys that once price gets to these levels, that's when you want to make your move. So let's say, let's say we were right here. Let's say we were right here. So we say we're right here. You see, price ended up buying immediately right here. And what you want to do is you want to take the buy at this level. So you see, this was, let me see. Let me go over here. Let me this one. Well, let's do it. Let's do this one. So you see right here, new higher high, new higher low right here. So you can see this. So this was an engulfing candle that it gave you right here. But what you want to do is take an entry right here at this position. You could have taken it right here, but the whole purpose is to take it as close as you can to the previous level that's just been broken. That way you can get a smaller stop loss, and the majority of the time, like let's say if price is in an uptrend and price is making a series of higher highs, right? Well, if it's making a series of higher highs and higher lows, you want to put your stop loss, you want to take your entry at that higher low and then you want to put your stop loss behind the previous low. So let me just do a little for it, because just in case I got beginners, like I said, I know forex can be a little bit much sometimes. So I'm gonna do a little example for you guys, so you know exactly what I'm talking about. Okay. So let's see if I got these lines real quick for you guys. Okay. So I'm gonna do it like this. Okay. Do it like this, and let's say price is in an uptrend, right? Well, price is in an uptrend. This is what it would look like. Boom. Right? And excuse these lines, guys, but I'm trying to make this as clean as possible for you guys, okay? Say price is in an uptrend with this. And what you want to do is you want to take your entries at these areas. So let's write uptrend, you know what I'm saying? For my beginners, you know what I'm saying? Because we're going to help y'all out. We're going to help y'all out, man. Trading can be easy. So this is an uptrend. So your entries would be right here. So your entry would be right here. Stop loss, you know what I'm saying? Stop loss behind the previous low. The previous, you know, see, this is a break, retest, entry right here to next level. Same thing right here. Break, retest, entry right here, take profit to the next level. Same thing right here. Break, retest, entry right here, and then you go to the next level. And this is all you are doing when you're taking trades for an uptrend. Now, if you're taking trades on the downtrend, and we're going to clear this out. If you're taking trades on the downtrend, it is basically the same thing structure wise, but you know, price is just going down. So I'm gonna show you guys. I'm gonna take these off, you know what I'm saying, because it's not gonna be confusing on my side, you know what I'm saying. We're gonna make this completely simple for everybody to understand. Downtrend, right? Downtrend on this level. Boom, boom. So look, price is in a downtrend. This, 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 this. Okay. So now, with the downtrend, you can tell that price is making a series of lower highs. Lower highs and lower lows. See, lower high, lower low, lower high, lower low, or lower low, lower high, lower low, lower high, lower low, lower high. Whatever you want to do. So this is how you take your entries with this trend. So we'll go to the short position. Boom. Once price breaks that support and retest it and establishes it as a new resistance, stop loss behind that level wherever you want, however you want it, and you can take it to the next level, and so on. Right here, take it to the next level, and so on. Take it to the next level. So this is basically what you are looking at when you are trading the markets, okay? Very, very simple. I have made it so simple. This is as simple as I could put it, okay? So say these are the H4 levels, right? Well, if these are the H4 levels, remember, if it's on the H4 level, that support resistance where price has hit and these levels, and it's formed an area of support and resistance at these H4 levels, and price has formed the support and resistance at the daily time frame levels. Those are areas of indecision. So those are the most important areas because they're higher than, you know, the 3 hour and below, like the lower time frame charts. So these higher time frame zones are more accurate, okay? When I say more accurate, all I'm saying is that price is more than likely to give you a big move at these particular levels, okay? Makes sense? So with that being said, that same situation that we just drew up is the same exact thing that you would do down here. So you can easily go to the 30-minute and go down, because it'll give you more information of what price is actually doing. And you see price came down right here, and it touched our level right here. So you could have easily bought in and put a stop loss behind the level, right? Very, 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 very simple. Very, very simple. You could have put a stop loss behind the level and then taken this to the next level. See what I'm saying? And see, after, price would have got up here, when you saw this one, you see it started to sell a little bit, retract, started having a little problem pushing through this level. And you see the engulfing right here on the 30-minute. And see what I'm saying? I see this on the 30-minute, but the 15-minute, might be a little bit different. Let's see. 15-minute, you see, you got this move. It gave us more data, and this actually looks a lot nicer on the 15-minute. You see what they gave us right here? Look at that. Nice little W area. So this is what I'm saying. The lower you go in the time frame, you just see different setups. But whatever setup that you're most comfortable with is what you're going to have to take. They have a lot of different patterns that you can see as you go down on lower time frames, just to give you a little bit more information on what price is doing. You know what I'm saying? Even if we went to the 5-minute and boom, we went to the 5-minute. Look at the 5-minute. That's a beautiful setup in itself. I would have taken that. I would have taken that easily. And this is how traders are getting small stop losses, because they have an eye for these particular levels to where they can, so you can easily move it up on the 5-minute. It's more zoomed in on the 5-minute. You can see exactly where price is. That's about 10 pip stop loss. You could have did 7 pip, whatever you want to do. Because once it's up in this range, now you're just waiting on the bullish move. I don't care. It's okay. I don't care if price, makes all of this noise. Like if it goes up, down, up, down, up, down, up, down, up. All you're doing is waiting, because if it doesn't break that level where it has just approached or has just gotten to, then you are fine to hold the trade. What a lot of people end up doing is they'll enter right here. They'll enter right here at the level, and then let's say what you guys do. Some people will do it like this. So new traders, they'll move it up. They'll enter in the middle of the level and then have their stop loss all the way back here. So I'm not saying it's a bad thing to do this, but it's like you're going to be in a lot of stress, because you're going to be in a lot of drawdown. You can tell, like even if I just drew this up, that's 20 pips drawdown. 20 pips drawdown. Like, who wants to just endure that? Just to wait for price to go in your direction. You know what I'm saying? Just wait for price to get to the level. Even if you want to put a buy limit here, you know what I'm saying? You can do that too. If it don't hit your buy limit, okay. You know what I'm saying? It's all right. But imagine if it does, then you got a better position in the market than a lot of other people. You ain't got to mess around with all of this, noise in the middle of the range. You know what I'm saying? Don't be in the middle of the range. Be at the bottom of the range or the top of the range, depending on what kind of market you are in at the particular time. My words just running through my head. They not coming out the right way. Shake my head. But if that makes sense, so you don't want to trade in the middle of the range. You want to trade, if you're selling, you want to trade at the top of the range. If you're buying, you want to sell at the bottom of the range. But that being said, we're going to go back to the H1 chart, so you can tell. So boom, you would have had a move right there. That's only, bro, come on guys, that's 52 pips. 52 pips with that. Boom, you're done. Okay, and let's see what price does. It goes up, it comes down, it goes up, comes down. We're not taking a move. Boom. Okay, it gave us an engulfing right here. We got that engulfing candle right here. This is amazing. We see it on the hour 1 chart. You could have taken a move right here on this next candle. Same thing, stop loss behind this level, guys. You know what I'm saying? You could have taken it right here if you wanted to wait on the hour, or if you wanted to get it a little bit earlier. You know what I'm saying? Go to the 5-minute or go to 15. You can see it even faster. Get in, sniper entry, 18 pips. all the way to the next level, which is still going to be around 50 some pips. Boom. Then you're done. You got 2 trades that you just won just by you taking the trade at these levels. So then if you go up, you see price goes up right here, and it comes back a little bit. And this is where Fibonacci comes in too, but I'm not going to go over that in this video. So you can see how price came to this level. Now at this point, you know what I'm saying, I wouldn't have done anything unless I saw an engulfing candle right here. So then you could have taken a move right here on the second candle, and then all you're doing is putting it behind the previous side, so previous low. So you could have put it behind this for like 11 pips, which is still a little bit risky, you know what I'm saying? Or you could like put it to the next one. And I said a little bit risky because, you know, if you would have put it behind this, you know, the levels kind of like, the levels back here, you know what I'm saying? Really focus on that line that I got. That's where the level was. Even though I brought up the line chart, that's where that level was. That's support and resistance level. The line is like spot on. So if you would have just waited, you know what I'm saying, waited and taken it right here, or you could have taken it right here. Let's go to the 5 minute. Boom, look at that. Look at that engulfing right there. I would have taken this right here, honestly. And it's not even a lot of drawdown right there, guys. It's like, what, 3 pips drawdown? And now I just put it behind this level. And then, boom, that's another trade you would have won. Just like that. 40 pips. And then, once it got up here, you know what I'm saying, once I would have saw this engulfing candle, red engulfing candle, I would have said, okay, I'm out. I'm getting out of this trade. You know what I'm saying? It's about to come against me. So let me secure my profits. And then we're just waiting. We're not taking nothing. We're not taking nothing. You know what I'm saying? I'm just going for buys right now because, you know, we're in an uptrend right now. And a lot of times you want to trade with the trend, because when you trade with the trend, you're going to be able to get bigger moves. You can see, you know, these sales came in, but the sales are not that long. And it's simply because, you know, price is in an uptrend at this point. You know, it's making a series of higher highs and higher lows in this particular market that we're looking at in GJ. So I'm just taking buys. Some people take the sells too. I'm not saying you can't take the sells, but still, even if you would have taken a sell, you still want to take it around this level. See, when this engulfing candle hit, you can see structure was broken right here. Structure was broken. If you want to take that, you could. You know what I'm saying? You could have taken an entry right here and then just roll this down. Because when you know where price is going, you're not even risking a lot. It's like, what, 16 pips? When you know where price is going, where is it going to go, guys? To the next level. It's like ping pong, kind of. It's going back and forth between a level before it enters into the next zone. So I always explain this to people, like, very, very simple. It's like this, guys. It's like, think about it. It's like price is just going from zone to zone. So this could be like zone 1, zone 2. Oh, shoot. I'm so sorry for that. Zone 2, zone 3, zone 4, zone 5. And then, you know, this could be zone 6. Yay. So just think about it. All price is doing is going up from zone to zone. So it breaks. It didn't retest this zone. It went all the way straight to zone 2. Retest. Came up. Came up. Ping pong. Ping pong. Let's do it this way, so you guys can see it. See the little arrow. So boom. Boom. Right here. Came up into the zone 3, came down, back into zone 3, came down to zone 2 again, back into zone 3, retested zone 3, went into zone 4, retested, went into zone 5, came back down to zone 4, came back down to zone 3, came up to zone 4, retested, came up to zone 5, retested, came up, hit off the top of zone 5, came down, hit off top of zone 5, came down all the way to zone, what is that, 2, came up to zone 4, came back down to zone, into zone 2, still in zone 2, came up to zone 3, zone 4, zone 5, and so on. So you kind of get what's going on. So this is how you want to look at the market every single time, guys, and just trade it from zone to zone to zone. And what you shouldn't do, let me show you what you shouldn't do before I leave off here. Do not just get in just because you see these big old candles like this. Like that, it's just too much. It's too much. Imagine. So it's like you're taking a risk like this. Like, where do you even put your stop loss? Like, if you enter in the middle of this candle, you literally have to put your stop loss way back here, or I don't know, behind this next level, or it's a little bit more risky at that point, because a lot of times throughout this candle, like, this thing will draw back down on you. Imagine if you would have just entered right here. That thing could literally draw back down on you. Like, and I've seen it happen before. I've been in it. I've done it. And it's not a comfortable feeling. Like, you're going to be in some heavy drawdown, and you're like, oh my God, I got to pull out. It's just too much. And then prices start going in your direction. So it's like, psychologically, you don't want to go through that. You want to just get the simplest position to where you can get the less drawdown, to where you ain't got to worry too much, because nobody's going to be worried with a 10 pip and a 7 pip stop loss. Some people say, you can't do 10 pips, 5 pip stop loss. Like, you absolutely can. You just have to know when to enter into the market. Just remember, the closer you are to that powerful level, the higher chance you'll have towards getting a small stop loss. So that is it for this video, man. If you liked it, like I said, make sure you please like the video, comment to let me know whatever else you want to see. If I can help you guys with anything else, like whatever pops up to your mind, definitely put it in the comments. I'm here to help, man. Other than that, man, make sure you subscribe to the channel, stay alerted, because I'm gonna post another video probably about Fibonacci, and I'm trying to get candlestick videos and market patterns and stuff too. I'm trying to get as much content out there for you guys just to help out. But other than that, man, I'll see you guys in the next video. Peace.